Now, before we talk about Apple, we have to briefly touch on Atari. As I said, Sequoia's very first ever venture investment. Nolan Bushnell, the founder and CEO of Atari, again, was the first founder Don Valentine and Sequoia ever invested in. Bushnell, at the time of Atari's founding, was described as tall, had long shaggy hair, frequently reeked of marijuana, and, as if that wasn't enough, held business meetings in a hot tub. And these weren't just internal business meetings either. Potential investors in Atari had to partake. That's where they held the meetings, in the hot tub. If you wanted a meeting with Nolan Bushnell, had to get in the hot tub right at the office. So potential investors had to partake. And Don Valentine is on record as stripping down to get into the hot tub to conduct a meeting with Nolan Bushnell. So let's recap, because that was a lot. Bushnell, long shaggy hair, reeked of marijuana, held business meetings in a hot tub. If you know any founders like that, please let me know. But anyway, 1970s maybe can be an excuse for this, but crazy. Anyway, Don liked outsiders, though. He was a tough kid from Yonkers and was not the typical financial investors at the time, the button-up East Coast Wall Street types, who were quickly dismayed by the appearance and work environment of Bushnell and Atari. To say the least, they were not going to get in the hot tub with Bushnell. So Valentine aligned with the rebels, and he knew that the rebels were the ones who could see the future, while all the traditional-minded CEOs stayed in the present. Bushnell's visionary insight that attracted Don so much, was to give every living room in America the ability to purchase a gaming console for their home at an affordable price, rather than having to go to the arcade and pay for every game they played. So that's why Don invested in Atari briefly, but again, we're here to talk about Apple, so what does that have to do with Apple? Well, let me give you a clue. So, as I already mentioned twice, Bushnell, kind of a hippie, long hair, reeked of marijuana, business meetings in hot tubs. He's a one of one. But if you think about it, you might be more familiar with another CEO and founder that many people also described as a hippie, and maybe didn't have meetings in hot tubs, but maybe didn't wear shoes or rarely showered. Maybe you're picking up on the hints, because Nolan Bushnell was basically a slightly more radical Steve Jobs. Therefore, it may come as no surprise that Steve Jobs was an early employee at Atari. Bushnell hired Jobs when he was only 19 years old, and he worked somewhat closely with Nolan Bushnell. So maybe an early takeaway is to invest in hippies. I don't know if that's still the case today, or if the 70s were just the 70s, but hippies, if you're listening, maybe give it a shot. Investors, if someone walks in smelling a little rough, don't count them out. Anyway, Jobs used his connection with Bushnell to meet with Valentine about investing. But Valentine wasn't interested in being Apple's first investor. He felt they needed a sense of management and distribution leverage for their product. Again, at the time, it was just Steve Jobs and Steve Wozniak, who were great engineers and designers and visionaries, but didn't really have experience running a business. So there were a lot of the ins and outs that they needed to know that they didn't. And so it wasn't until a former Fairchild Semiconductor and Intel employee named Mike Markula agreed to invest in Apple and in turn become the CEO of Apple. So Don decided he wouldn't invest, but he would introduce Jobs and Wozniak to three people he felt could be CEO of Apple, or could help Jobs and Wozniak with the distribution and marketing and management and the real tactical business aspects for Apple. And so Don introduced them to one person who eventually agreed to come on, named Mike Markula, who was a former Intel and Fairchild Semiconductor employee. And so Mike was actually the first investor in Apple, and in part of his investment, he agreed to come on to be CEO of Apple. And so that made Don a little more interested. He trusted Mike, he knew Mike, and the company had been de-risked a little bit because Mike had become the first investor. Mike came in to run more of the business aspects, at being the CEO. But it still wasn't really enough for Don. He was kind of sitting back and just waiting to see how the whole situation would develop. So interestingly, Apple, continued on the circuit to go find investors. They still needed investors. They weren't going to just wait for Don Valentine because they had the Atari connection. They needed money. So they met with one of the only other VC firms at the time. Again, this is the late 70s, and one of the first venture capital firms founded, depending on your definition of venture capital, Venrock. And Venrock meeting is hilarious because Jobs, Wozniak, came to the meeting. Jobs, disheveled, smelling bad, just giving his typical appearance, but not the typical appearance of someone these East Coast type investors partner with. But Venrock took the meeting. They thought what he had to say was interesting and decided to invest $300,000 into Apple for 10% of the company on what they described as, quote, with a shrug of the shoulders, which is hilarious because Apple, $3 trillion company today, most valuable company in the world, the first major institutional investors for the opportunity to invest for 10% of Apple did it with a shrug of the shoulders. Just like, yeah, we'll see what happens. I don't know. This guy's pretty weird. This company seems interesting though, so sure, let's give him $300,000. Why not? I mean, venture capital industry is sometimes hilarious because there are still these stories today, even if there are some venture capitalists who are open about it and some who maybe don't like to give themselves that little of credit, but certainly still happens today. And it is naive to think that there's no luck in the venture capital industry, if not a lot of luck. But anyway, I thought it was interesting that Don still couldn't invest at the time, even though it had been de-risked by bringing in Mike. And especially because Sequoia's ethos in 1972 and still today is to back, quote, the creative spirits, the underdogs, the resolute, the determined, the outsiders, the defiant, the independent thinkers, the fighters, and the true believers. Now that's Steve Jobs. I'm pretty sure Steve Jobs even used a lot of, if not all of these words at some point in an Apple ad. So it's still surprising that Don didn't invest initially. But after Venrock came in, Apple became one of the hottest companies around. Everyone wanted to be in it. The Apple II had just come out. Apple was starting to get a lot of traction. They're becoming a very well-known company. And every VC was trying to come in now. It had been de-risked. They had a veteran CEO. They had a big-time venture capital firm in Venrock coming in to invest. So Apple was a great investment now. So what's interesting is that Don Valentine almost didn't get to invest at all. Apple had received the VC money they needed. They were now profitable. They didn't really need any more money. So Don did everything he could to invest in Apple. He basically had to beg. He sent many letters, many gifts, called many times to do whatever he could to get at least somewhat of a percentage ownership into Apple. But as we now know, Sequoia did eventually invest in Apple. And there are a few reasons why. One we already touched on, which was Don Valentine had built up Sequoia's reputation a bit by having success with Atari and helping Nolan Bushnell operate Atari. Don Valentine was very hands-on with Atari, helping them land a distribution deal with Sears and really helping them take off. Because again, Nolan Bushnell didn't know too much about running a business, so Don was really a key advisor for that, and that was known, that was recognized. And so Don was sympathized with these visionary characters like Nolan Bushnell and Steve Jobs. I mean, he was a visionary himself. He left his cushy job at Fairchild Semiconductor to almost start an entire industry himself in Sequoia and in venture capital. So he understood, what it took to found a company, and he felt he was the founder himself. And so because he was a visionary, he also recognized that there was a change going on in the technology industry. He was a longtime veteran in the industry. He had spoken to many founders, and he knew there was some type of disruption, some type of innovation coming. Valentine once said, quote, "One of our theories is to seek out opportunities where there is a major change going on, a major dislocation in the way things are done. Wherever there's turmoil, there's indecision. And wherever there's indecision, there's opportunity." End quote. So in 1979, when Don is trying to invest in Apple, incumbents like Xerox knew the PC wave was coming, and Wozniak even offered the Apple I to his employer HP. HP would have bought Apple for thousands of dollars, not less than $100,000, certainly. But HP wasn't interested because they were making so much money on their large mainframe computers, which sold at around $150,000 a pop. And they weren't interested in disrupting themselves by creating PCs that would be sold for a few $1,000s a pop. I mean, they had huge margins, huge revenue. Even if they could see the PC wave coming, they can't disrupt themselves. I mean, it's the classic innovator's dilemma. And whenever there's a scent of innovator's dilemma, as Don said, there's an opportunity for disruption, and therefore, clear sign for a VC to invest. So, as I talked about earlier, Apple, great investment. Great founders, great investors, great CEO, great market opportunity. And so Don had to get in. And so how he really got in was, as I talked about before, reputation. He had helped Atari in the past. He would be a trusted advisor to Apple. They recognized that. But again, is it worth diluting their shares more for that type of advisor? But the second part that we kind of touched on earlier is a lot of venture capital is investing based on your network and your reputation. I mean, sure, at the beginning, Valentine was interested in Steve Jobs. They're both outsiders, both visionaries, could see the potential disruption in the industry, but he still hesitated. Valentine had the opportunity to be that first visionary investor, the one yes out of 100 no's into Apple, but it was too risky for him. So the key, though, in this investment was when Mike Markkula came on and Venrock invested, and then Valentine had to invest. It had been de-risked enough for him at that point, and almost too de-risked to the point of him nearly missing the deal. But as I said, Valentine introduced Markkula to Jobs. So Valentine was very instrumental in the development of Apple. I mean, up to that point, Jobs and Wozniak had gotten all no's from investors. It seemed like that wasn't going to change, because even if Don Valentine, a radical investor himself, isn't going to invest, and there's only so many VCs at the time, it's going to be hard for Apple to find investors if they would at all. So, and this was recognized. I mean, Mike Markkula was very happy. He knew Apple was going to be big by now. Jobs and Wozniak were happy. They all appreciated what Valentine had done for them. So they basically paid Valentine back for introducing Jobs to Markkula, getting them to organize the company, leading to their initial large institutional capital by letting him invest and get a solid ownership stake in Apple. So again, reputation can be really important. Being helpful, anytime you can be helpful. We're going to talk about this more later, but it's always good to be helpful as a VC because you never know when it's going to pay you back. I mean, Valentine didn't have to do anything when he said no to Jobs and Wozniak. He could have said, no, I'm not interested. There's the door. Instead, he was very helpful. He liked the founders. He liked what they were doing. So he introduced them to potential CEO candidates, which again was huge for Apple. So had Valentine not done this, the story of Sequoia and the story of Apple would have been very different today. You could make the case both firms would have figured it out and be successful as they are today, or you can make the case that neither would have recovered from this blunder and either wouldn't be here today or be a lot different and a lot less valuable today. But anyway, because of the relationship he built, because of the reputation he had built, because of just being a helpful advisor and networker in the Valley, Sequoia ultimately invested $150,000 in Apple and generated a $6 million return when they sold 2 years later for a quick and fantastic 40x in just 2 years. But maybe I was talking too fast, so maybe you missed it. But they sold. In 1979, Sequoia sold. I mean, I don't know what Apple was worth in 1979. I think it was slightly under $1 billion, maybe around there. But wow, today it's $3 trillion. So yes, for those who don't know, Sequoia sold their shares of Apple in 1979 because they had to make tax distribution for their LPs. If this is your first time hearing it, I'm sure you let out maybe a slight gasp, maybe a slight opening of the eyes a bit. To those who've heard this before, I'm sure you're doing the typical shaking of the heads or the general sigh under your breath. It's always tough to hear. Now, obviously Sequoia would be fine, but a big reason that they'd be fine is because today Sequoia only takes money from tax-exempt LPs, such as endowments and nonprofits. And I think you can guess why after reading this. They did not want to go through anything they went through with Apple again. Maybe because Venrock held on to their shares only 1 year later and generated 10 times the returns that Sequoia did. Or maybe, as I said, the fact that Sequoia shares in Apple's today would be worth tens of billions of dollars, maybe pushing 100 billion. So, it's hard to say whether they'd hold all the way to today. But point is, $6 million could have been a lot more had they been able to hold. But anyway, a win's a win. Worked out in the end, but wow, what a tough end to that story.